the interest rates are totally manipulated. Here we're working with interest rates now down 0%, and is it any wonder that we have these troubles? But unfortunately, Chris, too many people believe in it, and they're still having high hopes. The Fed will take care of us, and the spenders in Congress will come to our rescue.
An increase in wealth is an increase in goods and services. The purpose of money is to help facilitate trade. It frees us from barter. They're just saying print more money, stimulate. And it's not accomplishing what they want it to accomplish. It doesn't create more wealth. All it does is it makes the dollars that we have worth less.
A central bank's position is to bring stability to financial markets. It's to create currency and to get currency into circulation. A central bank's ability to control an interest rate is all around the expansion and contraction of capital in markets. Traditionally, this is before the 2008 crisis, you could be awarded as a saver for having money in a bank. So you credit your money in a bank, you hold it on deposit, and the luxury for doing so is the bank will pay you an interest rate of 3%, or 4%, or 5%. If you have a high interest rate, what does that psychologically do? It means that as investors, as individuals who are storing and holding wealth, we're incentivized to hold our wealth at a financial institution because we're getting a return. Where this becomes a complete, utter new experiment is on the subject of negative interest rates.
Ever since the financial crisis, central banks have been trying to plug holes in a ship that just keeps springing leaks. By and large, they've used quantitative easing, buying up government bonds, hoping that it'll pump more money directly into the economy. Now they're going for negative interest rates, because in that upside-down world, paying someone to borrow money may actually be a good thing. It gets people lending and spending. But now an in-depth study from Standard & Poor's on the impact of sub-zero rates across the developed world is warning they have unintended consequences for the world economy and could possibly lead to cash hoarding by consumers, which isn't really productive for anyone.
So we know the initiation of negative rates kicked off with Denmark. Then it was followed by the ECB. Then it was followed by Sweden. Then we had Switzerland and Japan joining the party. We've got enough data to show us that although the experiment has been maintained for close to a decade, it hasn't sparked or spurred economic growth. If the central bank issues negative interest rates, they're issuing those negative interest rates for the luxury of a commercial bank to hold their capital at a central bank. If a commercial bank has $1 billion at a central bank, commercial bank now has to pay the central bank for the luxury of holding its $1 billion. That capital is holding on behalf of other individuals, businesses or private individuals. If commercial bank is getting charged to hold their client's capital, they will just pass on the charges to their client. So it doesn't mean that you and me are going to get a negative interest rate mortgage. It just means if it's more costly for a commercial bank to do business with a central bank, commercial bank will pass on costs to retail individuals and other institutions. If banking fees and the systemic risk within banking become seriously worrying, which they're on the verge of becoming very worrying, what do you reckon your everyday individual would do? You withdraw your capital from the bank and you plonk it underneath your mattress. Now I'm not subject to a negative interest rate. So that's your protection mechanism. But if you do that, you're now actually creating the prerequisite that they're all fearful of being created, which is the fear being materialized in a way that impacts the financial system, which we call a run on the banks. How do you prevent that action? Well, why don't you bring in a digitized version of cash that the central bank controls, that the central bank owns? In fact, maybe the fact that we've got a pandemic around the planet right now, no one wants to touch each other, it's a really good time to increase the limits on contactless payments and use it under the guise of being hygienic, while also start threading in the conversation of cashless society in order to ultimately prevent your mass population from being able to withdraw their cash, physical cash from a bank and plunk it underneath their mattress. We've experienced the inflation cycle. The fact that we've got multiple trillion-dollar companies now is evidence that we're on a pretty radical inflation cycle. We've never had companies valued at these types of valuations post our last pretty dire economic situation, 2008, 2009. And we know it's a result of zero rate money creation over a 7-year period. That's basically crony capitalism, central banks giving the money to their banker buddies, their Wall Street buddies. And that money was going into stock buybacks, is going into equity. It wasn't really going into innovation and stimulating mainstream. And the pandemic this year, shutting down the economy globally, and then having central banks come in and usher in a new wave of inflation. How does money that doesn't exist come into circulation? How do you get it into circulation? You have to buy something. There has to be a trade. There has to be a equal consideration. And then you need to sell the public that you can issue and keep creating debt at this rapid rate and tell me that my grandchildren ain't gonna have to deal with this. It will change the spending behavior of the public. So I'm not stimulating the market in the way that they need us to stimulate the market. When that happens, what is their way of remedying any collapse? Print more money. And that's then going to create the hyperinflation cycle. When public perception is so low because you printed too much money, it's then lost. And then you're dealing with the collapse of all your asset prices and your commodities. And because you're on your political cycle of only 4 years, you're going to be like, get that money machine printing. That is what creates your inflation, deflation, hyperinflation cycle. And I feel and fear that's where we're heading. We do have solutions, however. So what we're building here with Bitstocks, with Gravity, is a solution. Being able to tokenize fiat and reintroduce the privacy aspects of cash, physical cash, with a digital equivalent of cash, which is what we're doing with Bitcoin, the stable coin that's going to be the center house of how we deliver our personal account experiences. So there definitely are solutions. Unfortunately, we just need to be very aware of the solutions being proposed by these central institutions, because the solution of a cashless society is to plug the fact that they know they're going negative and contain all the liquidity into their little pot that they all want us to be part of.